Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope you are able to hear me. Good day to one and all. Let me display the slide. Asian session live market analysis on January 11th, 2010 between 5 and 5:30 GMT. So it is a simple market tracking technique using the live market code page. So I'll give the link for the live market code page. You can open it in a browser. You can open it in a browser and I will display the camera over that of the live market code page. So currently the market is firmed up showing the USD weakening move. 1.4997 is the current level in the case of euro. 1.4999 is the ask. The low is 1.4404, which is higher than that of Friday close low, and the high is 1.4531. The net change is 87 pips positive. So there is a hurry in rising euro during the thin volume Japanese session. You can So in a thin volume Japanese session, they have quickly gained the levels. So we need to identify the possible intentions of them. In the case of GBP, 1.608488 is the current level. 1.6034 is the low. 1.6106 is the high. And they are holding near that of the middle level. The next change is here 62 pips positive. And in the case of yen, 92.29 is the current level, 92.19 is the low. It is closer to that of the low. The next change is 34 pips negative. So in the case of Swiss franc, again it has revisited 1.01 area. 1.0168 is the current level. 1.0134 is the low. 1.0240 is the high. The next change is 68 pips negative. When euro has made a 68 pips positive net change, CHF has made 68 pips negative net change. So in all the majors you come across, the USD weakening move as a continuation of the move from that of Friday due to the impact of non-farm payroll. Then let us review with regard to the commodity pairs. 1.0271 is the current level in the case of Canadian dollar. 1.0255 is the low. 1.0309 is the high. The net change is 25 pips negative. And Australian dollar 0.9310 is the current level. 0.9249 is the low. 0.9317 is the high. The net change is 64 pips positive. So Canadian dollar is showing a nominal negative condition, and Australian dollar is showing a good rise of 65 pips from that of Friday close. So we are able to understand that the denominator currencies, especially the Canadian dollar, has shown lesser drop when compared to that of the numerator commodity pair, which is showing more rise. So this gain, they have done it during the start of the Japanese session. So what could be the possible moves we could see in this particular day, the week beginning? So you know that week beginning, they are known to make false moves. So let me just focus the camera over that of the slide. So the expected moves in this particular session and also during the day, the Japanese session, volatile moves are expected. There is a quick gain of level and slow slide. Then again, European session, volatile moves to start with. That is a quick gain of the levels, and probably they may make an upward stop and above that of the high in the case of euro and GBP, and a downward stop in the case of the denominator currencies. Then subsequently slide, that means USD gaining moves will be shown afterwards. So initially USD weakening move and subsequently USD gaining moves will be seen. Then during the US session, again they will try to make a false move going up to that of the high and then slide. So this is a weak beginning false move they are showing. So when they make a rise during weak beginning, you can understand it's a false move. So they intend to drop. And you know that BOE interest rate decision, they have reacted, and non-farm payroll, they have reacted. Now they have the ECB interest rate decision in this particular week. So before that, they will try to accumulate more and more positions at the lower level. So initially showing higher level and inducing the traders to go long and subsequently make a drop and induce them to liquidate the buy positions and then again make the rise. That rise will be to gain levels to offload their positions. So that is what I have given it in the blog on Friday, that we need to understand their intentions on Friday after the non-farm payroll. Before the non-farm payroll, as expected, they made a false move, a quick drop and cut the low. And euro, in the case of euro, they dropped it to 1.4269 area. And subsequently, after the release of the non-farm payroll, as expected, they made a very quick rise and they raised it up to 1.17. Then they did not sustain the higher level when the traders freely taken the buy positions, taking into consideration the impact of non-farm payroll. Then subsequently they made the drop, and only towards close of the US session they made a small firming up move, and today they opened it higher. The net change indicates very clearly the current level is, in the case of euro, is about 86 pips lower on Friday. The Friday closing was about 86 to 87 pips lower, so around 1.44 area, and subsequently they made the rise. So here you come across that they are making wide range swings and they are not breaching those levels except in the euro from that of the trading range, and they wanted to accumulate more positions without making further rise and giving opportunity for that of the long holders to book profit. You might be able to see profit booking opportunity of about 75 pips. Swing trade can be done as buy and sell trade or sell and buy trade. But if you try to aim for a position trade, these are all not the levels to take buy positions. Let them make the drop during this particular week. And especially I am expecting a very big drop on Thursday, and subsequently you can take a buy position, take the buy position. That could be your position trading buy positions. But now whether you are doing a buy and sell trade or a sell and buy trade, try to close the positions with about 45 to 75 pips profit. When the going is good, keep stop at entry and limit the risk and maximize the profit using the stop to trail along with that of the market trend and try to close it with a limit or with a trailing stop. Now with regard to the initial lows and the highs set for today, euro's low is 1.4405. It's quite far away from that of the high, but we will see that they are coming closer to that of the low during the US session, and subsequently 1.4531 is the high, and they are not cut the high and they are holding near that of the high. During this session they are not cut it. They will make a small slide and again they will try to hit the stops above that of the high. Those who have taken sell positions in a hurry, they will try to cut the sell or hit the stops and subsequently make the drop during the European session. So during the stop and above that of 1.4531, you can probably watch the new high and try to take sell positions. Then in the case of GBP, 1.6034 is the low, 1.6106 is the high, and they are now making the Euro GBP firmer. So the net change in the case of Euro GBP is about 18 pips positive. So you can understand that they wanted to focus more on Euro to make a rise and not to rise GBP in a big way, so that Euro GBP could make another rise. So another 20-30 pips or 40 pips they may make and do an upward stop, and subsequently when Euro is dropping, GBP will try to rise and create the bullish field and induce the traders to buy. Then tomorrow you will come across that those who have taken the buy positions will be forced to cut the positions with loss in case if they hold it as a position trade. If they try to book profit, no problem. Then in the case of CHF, 1.0134 is the low, and don't think this is the low, and 1.0240 is the high, and they are holding around 1.0164, and they could make a one downward stop, and when the euro is making a rise, and afterwards they may make a rise and go closer to that of the high. In the case of USD yen, 92.18 is 19 is the low. And 92.67 is the high, and there is a narrow spread between the low and the high. You just wait. They could make the drop in the case of USD yen as a contrarian move any one of the day, either tomorrow or day after. When euro and GBP are dropping, they will try to drop USD yen also. USD yen is expected to make a range bound swing from that of 90.50 or 91 area to 93 to 93.85 or 93.75 area. That sort of swings will be seen during this particular week. Afterwards, you will come across an upward breakout in the case of USD yen, and they will also rise along with that of euro and GBP USD yen at that time. Then Australian dollar, which has already gained a significant level and continuously from 0.89 area, it has come to about 0.9249 to 9317 area, and high, the market is currently closer to the high. They could make one more upward stop, and in the case of Australian dollar, so probably 93.37 or 43 they may show, and subsequently make the slide during the European and US session. Then in the case of Canadian dollar, 1.0255 is the low, 1.0309 is the high, and which is expected to make the gaining move. You can understand the net change in the case of Canadian dollar is 31 pips negative, and Australian dollar is around 60 pips positive. So you can understand that they wanted to drop less Canadian dollar and then subsequently make the rise. And it is not in tandem to that of the Australian dollar rise. So as I explained, that euro made about 68 pips negative move, now currently 99 pips positive. Net change is seen in the case of euro, whereas CHF, the net change is 73 pips. So you can understand that they are slowly raising the levels in the case of numerator currency, and correspondingly they are not dropping. Initial drop they made it equal, and subsequently they are holding that of the denominator currency. Lesser drops are seen in the case of denominator currencies. This is one way of making the contrarian move, even though you come across all through the USD weakening move, and then subsequently you will find that USD gaining moves are expected from that of late US session and also tomorrow, and then they will talk about the other type of data to be released in this particular week. Then after accumulating all the positions in the case of other majors, they are expected to gain the levels quickly in the case of the other majors in order to book profit. So let me minimize the PowerPoint presentation. I'll display the forecast slide again, because some people who are joined late might be interested to know what could be the possible or expected moves. So during the Japanese session, volatile moves and a brief slide is expected, or open high and make some false move or go up to that of the high and then subsequently slide during the Japanese session. But that slide will not be very significant. They may not go closer to that of the low. They may just drop out 30-40 pips. And European session, they will again make a rise and try to hit the stops above that of the high. And that could be the ideal time to take sell positions. And then subsequently from mid-European session, they are expected to make the slide. And there could be a quick drop also towards late European session. And then again, they will try to gain the levels quickly during the gap time and the early US session, as if it is going to make a euphoric rise and then make the slide. So this is a week beginning false move. That is what it is being foreseen now. So as the day proceeds, we will just try to confirm whether they have already accumulated the buy positions or they are just making the week beginning false move, because the second week of the month. So normally from during the second and the third week of the month, they will make week beginning false move. The false move will indicate whether they wanted to take it upward or downward. So if the week beginning false move is confirmed by the slide during the year session, then you can understand till midweek they are expected to make that drop, and probably again a volatile move on the slide on Thursday, that is 14th of January, then make their recovery move or a lower level consolidation on 15th. Then subsequently from 18th onwards, the week after that onwards, they could make a week beginning false move of a drop, probably a downward stop and extended downward stop and make a very quick position trades aiming very big drop. So let me minimize the PowerPoint presentation and focus the camera over that of the live market code page and take up the questions which are asked here. GP has got a question. What should I do when market goes opposite direction and hedging order makes profit? Okay. When you are keeping a hedging order, say I had taken a sell position in the case of euro on Friday 1.4410 and kept a hedging order 1.4440 thinking that it will come down. But subsequently the market has gone up. 1.4440 is being filled, which is making a huge profit. And I have got several options with regard to that particular hedged position. My loss is locked, but it is not realized. I have got a lower level sell position, higher level buy position, and I can keep the stop at entry in that of the hedging when it is making profit and allow the market to go to any higher level, but still I am not incurring any further loss. When the market comes and hit my stop at entry in the buy position, then it will start dropping downward. I will try to book profit in my sell positions. So here I am using the hedging to limit the risk. So that is one possibility. The other possibility is when the high has been formed, say for example 1.4531 has been formed, and they are holding near that of the high or holding above that of the earlier high, initial high, then I wait for them to make a new high, an upward stop and potency is seen, then probably 1.4560 or 65, I keep a limit, and then once the buy position is closed with a profit, I keep another hedging order 30-40 pips above that of the market, and when the market starts sliding, I lower down my hedging order as a protective measure to realize my profit, and till such time the market falls to below that of my sell position, 1.44 area. Then once it goes below 1.44, I keep stop at entry in my sell position and remove the hedging order and try to maximize the profit on the downside. So that is another possibility of either way trading. Then the third possibility is after the rise, and when I see a significant rise has happened in the market, they may not visit 1.44 and things like that. If I perceive it, then I try to take another sell position after closing the buy position and close both the sell positions below their average. That is other way of trading. There are various means of trading when you start using the hedging. So you need not become panicked, and when both the hedge positions make loss, don't lose your heart thinking that, okay, we are struck with both the positions. Even if you close both the positions, your loss is the same. So it is not an uncertainty, and your loss is being locked. And you can make it as a realized loss by closing the hedged position, closing the original position with the hedge position. The platforms have got that options, and you can close it that way. So probably during Tracking the Market Together webinar, I'll explain more about using hedging and other type of trading strategies associated with hedging. Okay. Then Ketan has got a question. When could we see levels like 1.64 in the case of GBP? Yeah, by third week of January, third and fourth week of January, we should be able to see uh, good gains in the case of GBP. And by first week of February, definitely I'm anticipating 1.64 to 1.65 area. It all depends how far they are accumulating the buy positions before making a big rise. So we have to wait for them to accumulate the positions. Before that, for our sake, they will not make any big rise because they are mainly focused with regard to their positions, and they know how the traders can be induced and deceived, and they can induce them to sell at a lower level and subsequently make the rise. So they can just rise the market and the traders could become bullish and based on Friday news and try to take buy positions and then drop so that they will liquidate at the lower level. Then the players become the buyers. Then QP, after I close the original loss-making positions, keeping the profit-making hedging positions, what if price comes back? See, when you decide, so suppose 1.4410 you got to sell, 1.4440 you got to buy, then market goes to 1.45 or 1.44 area, or 4450, immediately you close your sell positions with 70 pips loss, then your buy position will be holding about 40 pips profit. And once you earn another 30 pips, try to keep stop at entry so that you will have a break even. Then make it as a trailing stop to maximize the profit on the upside. That is the other way of trading. So that at the end of the day, you should have the net profit. So you have to decide when you have to use such trading strategies, and for that you need to follow you need to track them. Only then you will be able to decide on the right type of trading. It is not that easy. It is like a driving. Suppose when you are driving a vehicle, you should know when to apply the brake and when to apply the gear and when to apply the clutch, and these are all which comes automatically. So you have to develop the style of trading, and you cannot say that simply I will apply brake or simply I will accelerate the vehicle. So you need to understand the environment around you or the road conditions, and that is referred as developing the road sense. The same way you have to develop the market sense, and then if you try to do the trade, you will find that trading becomes a child's play. Okay, Eric again is asking about gold. So could you give your views on gold this week? So as I explained earlier, gold is expected to make swings and slide and things like that. So I am anticipating gold to come to around 1000 area by end of this month. So I do not, but there will be up and down moves, and you should be able to watch carefully and try to take positions there. Whenever they are making upward stop, and you can take positions, and once the position makes profit, you try to keep at least stop at entry. You know that it is less volume commodity, so obviously there will be more volatile moves. You have to perceive that and try to take trading. What is the trading range you expect for USD CHF in this week? So USD CHF is expected to trade around 1.0150, or they made a breach below that. 1.0150 to 1.0400 area could be the trading range. How do you see yen crosses? Okay, yen crosses, as you know, that they will try to make a rise and then make a deep drop and then again make the rise. So initially during week beginning, when they make a net change positive, you keep away from the yen crosses. Watch them. Don't try to take sell and buy trades, because you will become highly impulsive when they make a very quick rise like this. So you wait for them to make a drop and subsequently take buy positions after a deep corrections. Because in the case of yen crosses, sell and buy trade might appear interesting, but if you get trapped, you will be vulnerably trapped in the case of yen crosses. So they have made, in the case of euro yen, for example, the net change of 34 pips positive, and in the case of GBP and net change of 4 pips positive. So you can understand that they intend to make the drop. When Euro and GBP make the drop, USDN is also expected to make a drop as a contrarian move and subsequently make the rise. So whenever there is a drop of about 150 to 250 pips from that of the current level, then try to take buy positions, and that will be really beneficial. Don't try to jump into the positions just because it looks bullish, bearish, etc. How low Australian dollar can go? So Australian dollar could revisit 0.89 or 88 area and then make the range bound swing of 93.50 to 88.50 to 89.50 range. It will be range bound moves in the market this week, so try to do only wide range swing trades without any bias. Do you think GBP USD will revisit 59 area in this week? Yes, it is anticipated. So probably the news might be pertaining to Euro, but still they will make the GBP drop in order to create the market sentiment. Because GBP is less traded currency when compared to that of Euro. So obviously making a quick drop in the case of GBP, they'll have double benefits with regard to their crosses also. So they will try to lower it and quickly change the market perception or sentiment and then drop Euro. During the drop of Euro, they could rise GBP and reverse Euro GBP moves and other European currencies. And the Doc Joe, how low level could you see before the big rise in the case of GBP? That is what I explained. In this week, GBP could revisit 1.5859 and probably they may make a downward stoppment to that level of 1.5850 and then make the rise. Do you say that 18th after a big drop in Euro and GBP, we can take buy positions? Yeah, on 18th, I'm anticipating a very quick downward extended stoppment and subsequently make the rise. So you might be tempted to take buy positions, say for example in the case of Euro, on a false move on Friday 1.4269 or 1.4270 or below 1.43 could have been a good buy or entry level. And probably anybody who has taken the buy position and holding it, they could make one downward stoppment and then make the rise. So this is what you come across as an extended downward stoppment before a big upward move or extended upward stoppment before a big downward move. So anticipate the downward stoppment and that will be very extended move, will be very, very quick, and that should happen within the same session. So during the start of the European session, if they drop, before end of the European session, they will regain all the loss. That is an extended downward move. And that time, if you try to take the position, you will find that position trading will be giving a very big profit. Then L1C. Can we initiate sell positions in Euro and GBP as safe trade? Yeah, during an upward stoppment, you can take sell position and still use the hedging order to limit the risk. When the going is not good, you try to cut the sell position and try to maximize the profit with a buy position. So you should have a very clear trading plan before taking any position. Just because I said that you should not take a position and start blaming me, that does not help you in your trading. So you need to understand when I take a sell position or when I take a buy position, how exactly I am going to handle the positions. The market moves in my favor or if it moves against me. There are only two possibilities, but if you plan yourself for both the type of possible moves, then you don't become panic or you don't become stunned. You don't get a mental block. Then it is easy for you to handle the positions because market is bound to make up and down moves on a daily basis. Then do you expect both Euro and GBP to drop quite big on Thursday? Yeah, there could be a significant drop, and I'm expecting a drop to revisit the earlier lows because players need to accumulate buy positions before making any big rise. Do you expect a brief extended downwards drop before the drop? Yeah, the extended, a brief upward stop and is seen now in order to drop, and subsequently they will make a downward stop and before making a rise. Yeah, I'll display the slide. When do you see higher level range trades in GBP? GBP is expected to reach 1.63 to 1.65 area by end of this month and first week of February. I'll be explaining more in detail about the expected market moves for the year 2010 on 15 GMT, and during a webinar, the forecast for the year 2010. So at that time, you will get all the possible weighted moving average levels and what could be the moves for on a monthly basis. How do you see Euro GBP cross? Euro GBP cross is expected to make initial rise. As you see that net change is positive, they may visit the area of around 0.9050 or 0.9070 and subsequently make the rise. Wait for them to make the gains and always compare the net change. Once the net change in the case of GBP becomes more when compared to that of Euro, then try to take sell position. That is how we should be able to relate that currency pairs when you want to trade in cross. What could be the high in the European session before the slide? So GBP could cut the high 0.6106 briefly. Then GBP expected to cut today's low probably during the US session. They could cut the low. Will there be more than 200 pips moves in one direction in extended move? No. Normally they make their extended stop for about 150 pips in the case of Euro, and within 30 minutes to 1 hour they just gain back all the losses. That is an extended move, and probably they will try to use any rumor or any data release for that, and subsequently they will give a different interpretation and reverse the market. Understand that they have made that extended downward stop. So that is basically they allow the traders to develop the bullish feel, and the traders will start accumulating the positions, buy positions, and lead to over trading, thinking that okay, when the market rises, let me buy at a higher level, and so that when they go up, then I can book very big profit in that. So when they aim like that, when they have taken more extraordinary positions without realizing that the equity may not hold such positions when the market goes against, then they make one extended downward stop, and most of the positions might be closed in margin call for such traders, those who have done over trading, and subsequently they will make the rise. The rise might be in anticipation of the traders, but unfortunately because of over trading, they might lose predominant of the positions. That is what happening in the market, in the trading platform. Many of the times you come across the margin calls for that of the traders because they are not in a position to understand how much of positions they can take against their usable margin. That is why I always tell people that try to take a maximum of 5 to 10% of your usable margin or equity, the positions, and once the profit is realized or booked in the positions, subsequently think of another trade. Don't try to keep your hand on every currency pair thinking that okay, it has reached the extreme, let me take positions and let me earn and things like that. Probably they are not going to give that earning so easily when you are an over trader or an emotional trader. Okay, then how high AUD USD can go? Yeah, AUD USD can go about another 30-40 pips higher. As a good exercise to learn to read the market, one should record every half an hour high and lows. Yeah, probably whenever they are cutting the high, make a note of the new high. And whenever they are cutting the low, make a note of the new high. Probably once a session, you try to make a note of the high and the low and see how exactly they made the moves in the market. You will be able to get a very clear picture. There is no need to use the chart for making this sort of understanding. See mostly the price actions that will be able to explain to you, and always try to relate it to that of the net change. That will give you a very great insight about the market. So let me just focus the camera over that of the live market put, over that of the PowerPoint presentation. So the expected market moves for today: Japanese session volatile move and a brief slide. Then European session, a very quick rise, volatile moves on the higher side. From mid-European session, that will be a slide. Then again, the US session, they will try to make a false move, try to go up to that of the initial high and then make the slide. Make a note of the initial highs. You will be able to identify during the US session how they are making such moves. After going below that of the initial high, say for example 1.4531, and they may just make an upward stop, and afterwards, once they go below that of 1.4531 and cut the low of 1.4405, and they may 1.4450, dropping about 30-40 pips. Then subsequently they will come up to that of 1.4530 and then drop. So that you will be able to understand how the week beginning false moves are being displayed by them. So this is a strategy they use in order to create the market sentiment and act against the traders. So I will again present the live market Asian session analysis by tomorrow. This webinar is being recorded. You can listen to it later. So I take this opportunity to thank everybody who has come here to listen to my presentation. So I will continue to post it in the blog and also give the updates if there are something else read in the players' intentions. Thank you all. See you by tomorrow.